Hey everybody, thanks for being here this afternoon. Happy to have you here as always. My name is Laura Bolio and I'm the VP of Marketing here at Holistiplan. I am pleased to introduce to you Meaghan Dowd. In case you missed it, Meaghan is officially a Holistiplan member. She is our Director of Product for Insurance. She has 4 specific designations, each related to specialized knowledge in different areas of insurance and wealth management. And what we're talking about today is something that is so important, especially as it relates to the recent hurricanes that we've had in Florida and North Carolina. Before we dive into it, yes, this webinar will be recorded. Yes, we will be answering questions in the Q&A, so don't hold back. If you've been here before, you know Meaghan loves questions. She's so knowledgeable in this area. So with that, Meaghan, take it away.
Thank you so much. Thank you all for joining this afternoon. I'm really excited to talk about this topic, not only because it's top of mind for a lot of us, but it's something that's awesome, often misunderstood when clients, even try to understand it themselves. So I've been in the insurance industry for about 15 years. I wrote a book called Protecting Your Lifestyle, really focus at content like we're going to discuss today, full of golden nuggets that just help advisors and heads of households better understand what risks are out there that their clients may face and kind of how to guide them through those situations. Um, as you all know, I'm passionate about education, not only for you all, but your clients, and just making sure that the investment that they're making in their insurance product covers their needs and wants if they should have a claim. And then when I'm not out enjoying insurance, I love to be with my family. We ride horses, and I do enjoy reading. So what we're going to cover today, first is just going to be kind of what is flood damage, what kind of flood coverages are available, the different types of coverages from what's covered and not covered, considerations when it comes to flood, and then we'll dive specifically into hurricanes. So, in the last year, $7 billion of damage has been caused by flooding. And in the last 40 years, $1.3 trillion. So it's definitely something that we're seeing on an increase year after year. And the NFIP, which is the National Flood Program, says about 40% of floods actually occur outside of flood zone. So while we all tend to hang our hats on, I'm not in a flood zone or the creek doesn't flood by me, the stats show that does not mean you're safe from flood not occurring. The average flood claim is around $69,000. So that's pretty substantial when it comes to planning and understanding if one of your clients has an unpaid claim from a flood, what does that look like? Or what if 10 or 15 of your clients have unpaid damages due to flood like we potentially have seen in, the foothills of North Carolina? And then lastly, this stat surprised me. Your clients have a 26% chance of having a flood claim in a 30-year mortgage, where they only have a 10% chance of having damage from a house fire. So while again, we all buy homeowners insurance for fires, the truth is your clients in floodplains are more likely to have a flood occur than they are to experience that. So something, and really why we're talking about this today, to help you guys understand the importance and nuances so your clients don't have to. So what is flood? Generally speaking, it's excess of water that occurs in a normally dry area. You'll hear me refer to the NFIP, which is, again, the National Flood Insurance Program. And I do that because it is a standardized policy. It's a FEMA-run program, so it's easier to talk about as a whole versus diving into what we'll talk here a little bit briefly about, which is the private flood market. So no, when you get a policy through the NFIP, it's standard. It doesn't matter what insurance agent you buy it from, whether it's a broker, a State Farm agent, a Geico agent, it's all going to be the same price. And the key, though, is the definition of flood and how and when it responds. So you'll notice that it either has to be 2 or more acres of normally dry land and or 2 properties. So it's not just as simple as your home being the only one that floods. It also includes some other things such as, mud flow. So in California, sometimes we see, due to too much rain, the movement due to flood, again, causing mud issues. And then the additional would be collapse or due to the undermining of water. So it's more than just sometimes what we think of when it comes to flood. And like I mentioned, there's 2 types of flood available for consumers. There's the private flood insurance, which is accepted by lenders, kind of varies in availability by state. The biggest difference is it can be canceled by the carrier, where the NFIP, once they're on it, they're on it. They can't cancel it. They can't increase pricing, and we'll talk through that here shortly. But there is kind of a guarantee insurability through the NFIP. The other big thing is there's sometimes debris removal that's available. There's loss of use coverage. So after a flood occurs, the National Flood Program does not provide any housing assistance for your clients to go live elsewhere. They're probably going to be stuck paying for their mortgage along with rent or whatever that cost for them to live elsewhere is. With private flood, they can add that as an additional coverage. There's also the ability for full replacement cost. We'll talk through the limitations that the NFIP has, but again, depending on the client you have, the size of their home, the private flood market might be a better option. There's less of a waiting period. So both flood programs have waiting periods. So your clients and you cannot call 3 days before, potential flood and buy the policy. There's a 15-day with private and 30-day with the NFIP. And then the big one, and this is something a lot of clients don't understand, the NFIP does not cover contents in basements and or finishes in basements. So for the clients that have finished basements and want protection from flood, the private market is really the only place they're going to be able to obtain that. And again, it does come with the cost, but if they're not in a flood zone, it's still something to consider, especially for your clients that have walkout basements, that when they get too much rain, the water tends to pool around that back door and might start to come in through, again, that walkout portion. So a lot of times when a claim occurs, how the water damage happened and where did it come from matters. Did the water come from the sky or did it come up from the ground? The flood is going to cover when a storm surge occurs and it intrudes through the doors and windows of the home. Where we see a homeowner's policy or wind coverage typically come into play is maybe a hurricane comes through and the winds are so hard that it knocks out all the windows, and now rain is coming in through the windows. A lot of times, while that may flood the home, it's actually considered water damage because the actual initial damage was caused by the wind. So, how the water gets in does make a difference when it comes to if it's a flood policy paying out or potentially the homeowners. Which leads us to just the next clarification of what's some flood damage and what's some type of water damage. So again, typical floods going to occur from hurricanes, too much rain, maybe rivers overflowing. We see that with lakes, and then obviously flooding from the ocean. Whereas with the homeowner's policy, that's typically like the pipes bursting, toilets overflowing, maybe the dishwasher leaks, HVAC units. So there is, pretty much a line in the sand on what's covered in what type of policy. So one thing that we're seeing come out is FEMA recently rolled out a new program in 2021 to better rate for the homes that are within flood zones. It includes a variable of changes, a lot of it doing with just more personalized rating for that flood exposure. So you'll notice they're starting to look at characteristics such as how close is the home to the water, the highest floor level, when was the last time it flooded. There are some things that the communities can do in which are considered flood zones to help with the rate in the new 2.0 program so they can install stormwater management, they can maintain the levees better, and again, take a little onus on them to hopefully prevent some of the damage versus relying on the insurance programs to pick it up. And then obviously coverage and deductibles help kind of dictate what the rate is. And I want to give an example just to, again, help you prepare clients for what it's going to look like as this new pricing rolls out. So in Alabama, for example, in September of 2022, the client was paying around $927 a year for their flood. With the new pricing program, they're going to see it jump up to almost $2,000 a year, which is a 121% rate increase. So the policyholder is going to see year over year until that gap is made up around an 18% increase. So again, for your clients that are in flood zones, and this is something that they have to have if they have a federally backed mortgage, this is a cost that needs to be potentially calculated into overhead for that household in the future. And then, like I mentioned before, the NFIP does have maximum limits that they can offer. So, when it comes to single-family homes, the most they can offer is 250,000 in building coverage and 100,000 in contents. For multifamilies, that's typically 1 to 4 units within the home. They do bump the building coverage up to 500,000, and then commercial policies have up to 500,000 for both the building and content. So again, depending on the size of the building, we do see having that wiggle room help cover, depending on what the client's needs are in the commercial space. And then something that you've heard probably if you deal with clients in flood zones is an elevation certificate. This used to be required with the NFIP, but it's no longer a requirement. So this really only benefits your clients in terms of having more individualized pricing. So if their home does show that it is elevated above the flood zone, they do get discounted rates. So again, not so much a requirement anymore, but is something that's recommended for clients depending on the location of their home. Another coverage that we see, and this again is something that does have a cost barrier, but when clients don't fully understand the importance of it, they tend to say no quickly. But there is an important understanding and consideration when it comes to the cost of compliance. One, it is part of the NFIP policy, and it helps with kind of updating the building or area due to the damages, especially if the community is deemed substantially damaged or has repetitive loss structures by flood, and it allows it to bring it back up to code. So whether that's, elevating the location, having it fully demolished if only a portion of it's been damaged, and or potentially relocating it maybe farther back from the seawall, whatever that may be. And then this is something though that is only part of the it does not take away from the contents coverage. So within the ICC, it is though the max of the building, and then you have separate coverage for the personal property. So what's covered? Um, Flood insurance is black and white when it comes to the NFIP. So you'll see here that it's, the electrical and plumbing, furnace and water heaters, permanently installed cabinetry, bookcases. So when we say permanently installed, that means is if you take the home and dump it upside down, everything that falls out is considered not permanently installed. So an example here would be like a refrigerator. So if the refrigerator is built into the home and does not fall out when you dump it out, it's considered part of this permanently installed. Otherwise, you'll see it listed specifically here under refrigeration. You'll notice here there's some detached coverage. There's also a little bit of permanently installed carpentry. So it all kind of goes into the building. And again, understanding the true replacement cost of your client's home will help determine if the NFIP policy is enough, knowing that the max they can buy is 250,000 in coverage. And then when it comes to contents, the list of coverages even gets smaller. So specifically, there's some personal property, washer and dryer, portable conditioners. They do offer a little bit of valuable items, but again, nothing too crazy and pretty black and white. It's also important to note that any content stored in the basement is not covered. So the NFIP policy is not covering any finishes in the basement or personal property stored down there. So what else is not covered by the NFIP? We've already kind of talked through that temporary living expense. So again, clients that have to live elsewhere after a flood occurs, they are going to incur that cost on their own. Some property outside the building, such as landscape wells and septics, swimming pools are not covered. Business interruption. So if clients run businesses out of their home, there's not going to be any coverage during that time. So it's important to make sure that their commercial policy does not exclude flood coverage from the business interruption protection. Valuable items, there's just that cap that we discussed. Vehicles are not covered by the NFIP policy. We'll talk through where coverage is extended to vehicles, though. Again, it's not covered in basements, and things like broken pipes and overflow of plumbing systems are not part of the NFIP flood coverage. Any questions on the NFIP, Laura, before I jump to kind of talking about flood zones?
Yes, there are a couple questions. So the first question comes from Joseph, and he says, don't you need NFIP to get private insurance in addition?
No, so you need the NFIP to get excess flood insurance. So sometimes if the client is in a flood zone where private insurance may not offer coverage, you would get the base level of that 250,000 through the NFIP and then buy excess coverage in addition to that through a third party that typically like a Lloyd's or someone of that sort.
Okay. Next question is from Mark. Mark says, why is there so much of a push for NFIP versus private insurance, considering the relatively low coverage limit for the NFIP policies?
So the NFIP has to offer coverage to kind of everyone. The private flood program can pick and choose. They underwrite just like your typical home or auto programs. So it's just not available. They also can kind of write in coverages that they want and don't. So it's not as strictly regulated as the NFIP. And the cost is usually probably anywhere from 20 to 40% more. So there is quite an investment to get those additional coverages where sometimes the peace of mind that's offered through the NFIP is enough for clients that don't expect a total loss from their home, but maybe they don't trust their sewage systems. And so they're worried if they get too much rain that the sewers are going to, back up onto the roads. And then that road comes into the front yard. And before they know it, they have, water coming into their home that may do 100,000 in damage. That's where that NFIP makes more sense than a private. So it is pretty client specific, but really the NFIP is going to always offer terms where a private company has the ability to decline.
Okay. This one comes from John. Are garage contents covered by NFIP?
No.
Oh, no. Okay.
Yeah. So I would say unless it's used to operate the home for some reason. So I would have to check on like maybe generators, but for the most part, like tools and whatnot are typically not covered within the garage.
Okay. I see a couple questions about slides and about the recording. So yes, this is being recorded, and yes, we will send out the slides after the webinar. So keep your eyeballs open for an email within the next day or two that will have the full recording and the slides so that you can catch anything that you had questions on. Okay, and then last question from Alexandra. Is there a state-sponsored insurance?
So that's the NFIP. So if the FEMA program, that's basically what you can get at this point.
All right. Sounds
Awesome.
great. Thank you, Meaghan.
Of course. So next we'll talk about flood zones. I think this is a term that people hear a lot about, but don't totally understand. I'm not going to bore you guys with reading you the slides, but basically if clients have a home in a flood zone A, flood zone V, or flood zone VE, and they have a mortgage, they are required to have flood insurance. All of these other zones have the option to have flood insurance and have a little more flexibility in what those coverages could be. Typically, when clients are in these two top tiers, the mortgage is only going to require, though, the flood limit to cover the loan amount. So depending on where your clients are and paying off that loan, they may not have to cover the full replacement cost. But again, that's something for them to kind of think about. And again, a flood zone is just a defined geographic area that has specific flood hazard risk. It represents the probability and impact of a flood occurring. So we tend to hear, the 100-year flood zone or 500-year refers to the probability of those events occurring. So in a 100-year flood zone, there's a 1% chance in any given year of having a flood. In a 500-year flood zone, there's a 0.2% chance of that ever having a flood. But in reality, the statistics show from the U.S. Army Corps of Engineers that the chances of a 100-year flood occurring is about the same as being injured in a car accident. And also, according to them, in the span of a 30-year mortgage, there is better than a 1 in 4 chance that there will be a flood in that area. So again, this is a relevant topic that especially clients in flood zones really need to understand that they most likely will experience a claim of some sort due to flooding if they're there the full 30 years. So personal property is something I just want to take a, deep dive into a little bit. One is, where's the property stored? So a lot of times the flood policies only cover at that specific location. So if a client has a storage unit elsewhere, they may want to make sure they obtain a second policy or just understand if there's flooding risk there. Again, this is also something that's overlooked if maybe the client's primary home isn't in a flood zone, but the storage unit excuse me, that they are renting is next to a creek. And what happens if that creek floods? So maybe they just want to buy flood insurance for the personal property in that storage unit. There's a wide variety of reasons, but again, where the property is does make a difference in that risk of losing it. And then keeping digital copies. Obviously, this, something that we see more and more today, but when a flood occurs, you lose most of your paper. And so making sure that clients have easy access to copies of their digital records is important, as well as retaining receipts. I think a lot of people have this misconception of after a claim, they're not really gonna have to provide a lot of documentation, and that's just unfortunately not the truth. Insurance companies want receipts, they want photographs, or really proof of ownership. So helping clients up front maybe start collecting receipts as they make large purchases. You don't need to know every time they purchase a new pair of jeans or anything like that. But again, those large are probably over $1,000. Help start saving those receipts. So if they do have a loss, you can quickly provide them an easy way to provide those documentations to the adjuster so they can get their claim taken care of in a timely manner. And then condo owners and renters. So again, condo coverage usually is provided by the master policy for the exterior of condos. Same with landlord coverages. A lot of times the landlord will buy the coverage for the building, but that does not provide coverage for any of the personal property that may be located within that rental portfolio. So it's important that personal property is covered by the unit owner and or renters on their own. And again, I think it's about just understanding where the responsibility lies and being very clear with clients, especially those landlord clients, that they make sure that their tenants know that there is the home's located in a flood zone, and that obtaining coverage for a flood is an important consideration, depending on, again, what those needs may be. So, what happens if your clients don't have flood insurance and a flood occurs? Well, there is some federal disaster assistance, but that's only available if the president declares it a natural disaster. So that's why flood insurance is important to consider. And if it is deemed a disaster and the assistance is awarded, it's typically through the Small Business Association with a loan that is paid back with interest, and or FEMA may provide grants with coverage up to $5,000. So again, not much in terms of true federal assistance at time of a loss that may really put your clients into some hardship. And then what about the cars? So depending on the type of auto coverage your clients have will help determine if there is flood coverage or not. If clients have comprehensive coverage on their cars, they usually do then have flood coverage at time of a loss. However, clients that have liability only coverage would not have coverage due to flooding. So again, while it's nice to go to liability only coverage, especially when vehicles are paid off, comprehensive deductibles are very, very affordable and may be a good option for your clients to keep on if they're in an area that, is close to a creek, is known for flooding, whatever it may be. These are just additional considerations. And then how are flood paid claims paid? So when it comes to homes, this is where the question earlier was great. And like, why do people go to the NFIP versus a private flood? This is where a caveat becomes a big issue because the NFIP is only going to pay replacement costs if the home's insured 80% to value. So maybe again, that client has paid their home off a lot. And so the mortgage is only requiring 100,000, but the home replacement cost is 400,000. If there is a total loss, the one flood damage is only going to pay out 100,000, but there is also going to be depreciation taken into account because it's not insured 80% to value. So again, understanding what your client's needs are, if we're just trying to check the box on a mortgage requirement, or if we really are looking for a flood to provide full replacement cost, can help determine if making an investment in a private flood program is best for them. The other pieces, personal property is covered on an actual cash value basis. So that means depreciation is taken into account. And so again, if the t-shirts, their clothing, their appliances are 5 to 10 years old, they are not going to get the full coverage to go buy new ones at today's pricing. And then what does it cost? So the national average, according to the NFIP, is about $819 for flood coverage. Obviously, if they're in a higher zone, it's around 947. Low zone is 628, and then for contents only is around $99. This is not really taking into account the 2.0 pricing, as that's still kind of being worked into the new stats. But for the most part, it's affordable from an exposure perspective, especially for clients in those flood zones. And just another reminder of what factors go into the pricing when we're talking about flood insurance. And then, what can you guys do to help, really besides educating your clients, when you talk to them, maybe ask about flood vents, or if you have clients that are building new homes, helping educate them around things they can do in that building process to help enhance and or maybe mitigate. If again, North Carolina, maybe we're afraid in the future of events happening while they didn't get, your client specifically didn't get damaged this year. They want to make sure if it does hit them, they're better prepared. These, again, the flood vents, raising utilities, so whether that's just off the ground or putting them on the roof can make a big difference. And then the elevation certificates. So before I jump into hurricanes, any last questions on
We
the
do.
flood?
We have a decent amount of questions.
Okay.
All right, so this is from Lehman. It says, to confirm, NFIP is needed or not needed to secure private insurance.
So it is not needed to secure private insurance.
Okay.
But private insurance may not be available to clients depending on their location.
Okay, gotcha. This next one comes from Holly. What is the official map to use for flood zones? Should I check local government site? The FEMA flood zone map for my neighborhood is shaded and the legend says X, B, or C. Which map will tell me exactly which zone I'm in?
Yeah, so FEMA's usually, the best one. I would say the assessors' websites for most counties are pretty up to date, but FEMA is usually where I tend to go. But I do think like mortgages and stuff tend to lean on the assessors' websites a little more.
Okay. This next one comes from John. If you keep items in a storage unit, doesn't the storage facility provide flood insurance protection for you?
That's just going to depend on the flood or on the storage location. There might be the ability to buy it as part of like your protection, but it's not automatically covered within the personal property offered.
Okay, so double check.
Correct.
Okay. From from Christopher, do you have parameters you use to know when it is appropriate to use an adjuster or not?
So the insurance companies are always going to have like adjusters come out. Is that the question? Or like when to kind of get a third party adjuster? I guess, can I have some clarification on that one?
That's a good question. I would vote we can answer probably both of them.
Okay. So when it comes to the insurance adjuster, they are going to be assigned by like the private insurance company or FEMA. So depending on who, but they're the ones that come and look at the damage. Sometimes third-party adjusters are brought in when there's discrepancies and or not enough boots on the ground for said insurance company. So there's a variety of reasons on why you may get one versus the other.
Okay. Oh, okay. Yeah, he said when to hire your own.
Very rarely, I mean, I shouldn't say rarely, but typically clients going through claims should not have to hire their own adjusters. That is like worst case scenario type situations.
Okay. This one comes from Steven. Do you need to be PNC licensed to sell flood insurance?
You do.
You do.
I say that pretty confidently. I actually don't know. I would assume because it's an insurance policy, while it's regulated by the government and FEMA, I still think you have to be licensed to sell it.
From Steven, are those monthly or annual rates or costs? I don't know which
Those
side
are
this is.
annual. I can go back.
Okay. Annual costs.
And again, remember though the price slide that I showed with the FEMA 2.0 pricing, the one that was in the high zone was technically 947 going up to 2000. So this is kind of what they're providing statistic wise now, but I do see it increasing over the next few years as the 2.0 pricing is in effect.
Mhm. This one comes from Karina. How would a client verify if they have NFIP or private insurance? Is it explicitly stated in a policy if they are NFIP?
It would specifically state NFIP. It would say National Flood Insurance Program, typically on the top portion of the policy.
Okay, so right at the top. This one comes from Jean. Maximum NFIP coverage for a single family home is $250K, which would be 80% of a $312,000 home. The replacement cost of most houses exceeds $312,000. So are you saying that NFIP would generally use actual cash value instead of replacement cost?
Yes, and this is where when you buy that excess flood coverage to get the full replacement cost, there's tip endorsements that can be added to help add additional coverage to that base level. So depending on where clients land in if they need excess or not, they can make up that difference there. But if it is insured less than 80% of value, the calculation's on an actual cash value basis.
Okay. And then we'll do two more and then we can keep going.
Sounds good.
All right, so from Cindy, is there any insurance that covers seawalls?
Not that I'm aware of at this point.
That's a good question. And then this one from Pablo. If somebody files a flood claim, will their premiums be raised?
So their like the flood rates will not be, and typically, so I'm going to say this carefully. I would say it's not going to affect their home rates, but depending on how the flood claim is reported by the insurance carrier, it could show up on Clue. So while it's not going to affect pricing, it may affect eligibility if they know from an underwriting standpoint that that house has been in a flood before. But I've honestly never come across a case where like a single home was outed due to a flood. Usually it's like areas like we saw with in New Orleans where a lot of markets just pulled out at once and everyone went non-admitted. It's not usually like a client singled out situation.
Okay. All right. Thank you, Meaghan.
All right. So hurricanes. So what is a hurricane? Because obviously when it comes to damages, there tends to be two ways we see it. One is through flood damage and the other is via the windstorm. Homeowners insurance policies in coastal areas that are prone to these hurricanes, though, don't always offer coverage within the home policy. So it is important to understand if hurricane damage is covered within the home policy and or if clients need to get separate policies. And according to the lovely records of NOAA, in 2024, the Atlantic hurricane season, which spans from June 1st to November 30th, predicts 85% chance of above normal season, 10% chance of a normal season, and a 5% chance of below normal season. And really, a lot of this just has to do with factors with obviously warming of the ocean temperatures and the development of the La Nina conditions in the Pacific. So as you can see, there's quite a few storms that are going to come through. You'll notice named storms and hurricanes. We'll talk through why this is important later on because this does change what coverages apply and when they are triggered. So the main difference between wind damage and hurricane damage is the speed of the wind. So within a homeowner's policy, they will specifically state what triggers the hurricane deductible. Industry standards around 74 miles per hour, but again, that varies by company. So please verify within the client policy. And states that are prone to damages also tend to have higher hurricane deductibles, and you'll notice that they're separated out within the policy itself. So what are the types of deductibles that we see? The first one we see is wind and hail. We tend to see this a lot in the Midwest where there's substantial wind and or hail damage, Texas, those sorts of states. And it's the broadest form of coverage that we see. It also does include damage if somehow a hurricane damaged or, tornado, strong thunderstorms are all provided coverage within that wind and hail deductible. And then it is on a per occurrence basis. So if one day hailstorm comes through and then 2 days later a tornado comes through, you're going to pay damage, or the damage that occurred between both those storms would have separate deductibles. So while again, I don't think I've ever heard that to occur, it is important to know that it is a per occurrence deductible. And then name storms. So while it's fun to see the names that the weather stations come up with, it does change potentially how a client's policy may react, because once it is considered a name storm, we do see different deductibles being triggered. They tend to be percentage deductibles, anywhere from 1 to 5%. And when we talk about percentages, it's like, well, percentage of what? It's the percentage of the rebuild cost. So client has a home that's $500,000 in replacement costs and they have a 1% named storm deductible, they will pay $5,000 of that damage. And then again, if it's a 5%, the math I'm not great at would go up from there. And then this is a standard from other deductibles and again, specifically laid out in the policy. And then for our coastal states, we'll see hurricane deductibles specifically listed out. And these, again, are activated once a hurricane has made landfall and within 72 hours of that. Again, the retention typically tends to be higher on the client's end. We have seen these go anywhere from 1 to 15%, even higher sometimes, depending on the location. And in certain states, I've actually seen where clients get rid of wind coverage. So they don't have hurricane, they don't have wind, they don't have anything. And some of that's due to the cost, because in areas that have hurricanes, the cost of a policy for a larger home could be $50,000, $60,000 a year. Plus, they have a 5% deductible on a $5 million home. Sometimes the math just doesn't math, and they would rather self-insure that. So understanding really how that deductible affects what the client's paying out of pocket and kind of what they're comfortable from a self-insurance risk can also help you just, again, add value to that conversation versus them just writing a check year over year, for almost 6 figures to an insurance policy. So this just quickly breaks down how the different deductibles apply based on the damage that occurred. So again, we have a $500,000 home. You'll be able to see just based what the thunderstorm, what that deductible looks like, a hurricane a tropical storm and a hurricane. Obviously the out of pocket just changes and really just more preparing you and your clients what to expect based on how the damage occurs. So the states listed here, and I'll leave this up for a second, these are the states that can have separate wind policies. So basically on the homeowner's policy, you're going to see an exclusion for wind. And when you see that exclusion for wind or hail, that also means hurricanes are excluded and named storms are excluded. So we are starting to see this more and more. I know like in South Carolina, that Safeco insurance doesn't always offer wind coverage. So, and they actually listed in the discount space, which it's far from a discount. So it's really important that, again, you guys are reviewing your clients and making sure that if you see in these states wind excluded, that you're asking for a separate wind policy to review. The thing with wind only policies is they tend to be non-admitted markets. So we've talked about this in other webinars, but I continue to hit home because this is becoming, again, a big dynamic in the insurance market. An admitted market is going to be backed by the government. So if they become insolvent due to, catastrophe type claims, there's some money there for your clients to still get reimbursed. Whereas these non-admitted carriers, if they become insolvent, there's no guarantee. So for clients that have wind only coverage in a non-admitted market, there's still a risk in that investment. So again, understanding how much they want to risk, what that dollar amount they're comfortable paying the insurance versus maybe keeping with you and reinvesting in the market and having your own kind of wind insurance, however you want to think about it. There's ways to get creative knowing that sometimes the coverages offered in the insurance market are not always guaranteed in today's world. So again, I think I'm going to go back to this slide, but it's really important in these states, especially as we see storm season at this time coming to an end, but really preparing for next year because it's not going to get better based on what statistics show us, that you understand how to help guide clients, whether they get changes in their policies next year, the following year, understanding what they're going to want to do in those situations. And then Florida. So I talk about this because I used to do a lot of business in Florida, and Citizens, I think people had somewhat of a misunderstanding. So unlike private insurance companies, Citizens is required by law, and they can levy assessments on its customers if funds to pay claims have been exhausted. So for Citizens policyholders, they can have an assessment which is substantial. You'll notice it can be up to 15% of that policyholder's premium. So if a client currently pays $3,000 a year, which is low in Florida, they're going to see an average of $450 surcharge. And that adds up year over year and really can be charged for quite a few years until the funds are made back up. The scarier part is, though, for non-citizen policyholders, if there's ever an emergency assessment made, this means that all policyholders are going to see a 10% increase. That's going to be around across the statewide premium, and that's for as long as necessary. So again, for folks in Florida, it's really important that you guys understand what Citizens is. It is the insurer of last resort. So if that's where you or your clients have to be, it's not a bad place. Thank goodness we have some option. But also, if clients have the ability to leave Citizens and maybe pay a little more to be with a company that can't fee them the second they become insolvent, I highly recommend having those conversations with your clients. So again, price is important, but understanding the implications. And again, this is specific to Florida at this point. I want to be clear. We will start to see this, though, in other states as we continue to see claims rise. So again, making sure you're not just helping your clients find the cheapest insurance, but the right insurance is going to help add value and hopefully keep them out of potential situations. So if anyone has questions about this, I do have a link here just to help clients calculate in Florida what that assessment could be. But again, something that's not talked about enough when clients choose to go to Citizens as their insurance carrier. And I just like to bring it to the attention of the advisors that help support them. And then quickly, how to help your clients prepare for a claim, because you tend to be one of the first calls they make after a loss occurs. So one, you're going to make sure they report that claim, whether it's to their insurance agent or to the insurance company. Being quick to report claims, especially at catastrophic situations. I caveat this because I'm usually not one to tell you to call in a claim quickly, but at time of a hurricane, flood damage, it is important to call in the claim as quickly as possible, because it is just a numbers game at that point. So first come, first serve. And so the quicker your clients can get on that list, the quicker they're going to get that phone call to talk with the adjuster. But in the meantime, after they report that claim, you guys can help them understand the documenting the damages. So taking photos of and videos of what's damaged, especially before they start ripping everything out, because that's one question people tend to get. Well, can I start taking out all this gross furniture, removing all this gross drywall? And the answer is yes, after you take photos, because the insurance company, of course, wants proof that that was damaged before the water came in. So again, having photos before they start taking everything out is important. Also, gathering receipts. So we talked about this earlier with personal property, and making sure that as clients start to buy, or invest in personal items, maybe helping them keep those receipts. So at time of a claim, they can quickly provide these, but also receipts for things such as maybe having the roof tarped if the hurricane rips shingles off, or maybe they have to board up their windows after, water comes through to help with security. Those are all things that they can be reimbursed for depending on the policy coverage. So it's important to gather those, hand them to the insurance company, and then let the insurance company determine what or what is not covered, versus your clients not having any type of proof and being able to recoup some of those costs. And then lastly, they're going to work with the adjuster. So we kind of hit on this earlier. It can either be someone that has been appointed by the insurance company and or a third party. We tend to see third parties come in at catastrophic type claims just because most insurance companies are not staffed to handle that volume at a single time. So it does vary, but especially with hurricanes, we do see a lot of third party advocates. Any questions?
We do have one question from John. So the question is, will FEMA tie the $250K contingent reimbursement for the recent storm damages to make the homeowner build up?
So that's where that cost in compliance comes in of $30,000. So if they have to add additional barriers under the home to have it raised above a certain level, there is $30,000 within the policy to help elevate the location.
Okay. This next one comes from Greg. Ooh, okay. So a neighbor had a tree fall on their home during Milton. Their insurance denied the claim because they removed the tree from the roof before the adjuster came out. Is it important not to do work on the home or even remove the tree before the adjuster comes out?
So this is where in my opinion, insurance companies put clients in a catch-22 because they tell you have to mitigate it and stop it from future damage. So depending on where that tree was laying. So while it landed on the neighbor's home, like if it was laying across wiring and like Ameren or the electric company had to remove the tree, then that's a different situation. But the client just removed it to be proactive, then there is the ability, especially if there was no proof. So which would be surprising if there was no photos or anything of the damage. But typically, if there's photos of the damage before it occurred, and then there's like a receipt for, hey, this is what was done, very, I shouldn't say rarely, but I usually those are still covered, especially if the adjuster's already been contacted. What could have potentially happened is they cut the tree down and then tried to file the claim. And then by that time, the damage was already removed. So sequence of events and when it all occurs does also make a difference in like when you notify them versus when you started to. But that's one reason I hit on documentation so much, because hopefully photos, statements can at least help have a paper trail for the situation.
Yep, order of events is so important there.
And I'll add one more thing. So if the whole tree situation, if the tree's dead or alive, makes a difference. So if the neighbor tried to file the claim on theirs, they may have declined it because whoever's house the tree fell on, the claim actually should have gone to that homeowner. So there's also the situation where one insurance company declines it because that's considered an act of God, and they would have only covered the tree falling on the neighbor's house if the client whose yard the tree was in was negligent due to the tree being dead. But if the tree was alive and the only reason it fell over was because of the storm, then technically whoever's house that tree fell on would have been the one filing the claim. So I don't know if that's how that worked out or not, but I have seen, and you will see declinations based on the neighbor trying to be a nice neighbor and when it really should unfortunately be the one that sustained the damage filing the claim.
Oh, okay. He said, thank you. The same person owned the tree and the house.
Okay.
This question comes from Holly. Is there a reasonable explanation for the Hurricane Ian claimants whose desk adjusters took 90% discounts against their third-party adjusters' damage assessments? There's a
I
60-minute
honestly,
story.
yeah, I have no idea on any of that, unfortunately.
Okay. All right, Andrea. Yes, this is definitely being recorded. We will be more than happy to send it out after this webinar wraps, most likely within the next day or two. So keep an eye out for that. And then this one comes from Ned. Back to the difference between wind and hurricane coverage. What if there's a tornado that caused the damage? Is this considered hurricane damage in your definition?
No, so that's where you see, like, especially in the Midwest, those types of areas that wind hail deductible would apply. And if there's no separate deductible, then tornado damage would be covered under what we call the all peril deductible.
Okay.
But unlike hurricane, there's not really a specific speed listed in policies that determine if it's a tornado or not. It's just all lumped in as wind damage if it's a tornado.
Okay. So that was it for the questions. Should we jump into a quick demo?
Yeah.
Okay, I can go ahead and share my screen. Okay, so as you know, one of Holistiplan's main goals is to help advisors provide more comprehensive planning for more clients. We don't want to do just tax planning or just financial planning. We want to be more holistic and more comprehensive. And so that specifically for today includes insurance risk management. And so if you haven't seen it before, this is Holistiplan's insurance risk management tool. So what it does is you upload your client's home, auto, and umbrella declarations page. From there, we'll put together a summary that will be white labeled with your logo. And it's a summary much like we have with the tax report. So you have the high level summary at the top. And then as you scroll down, you have these insights that are color coded in red, yellow, or green based on the level of urgency that you need to look at. So green means looks good, yellow, that there's a moderate risk, and red means it needs immediate attention. And so the goal of this is to flag things that clients might have inadequate insurance or the wrong type of insurance. And that's the whole purpose of this. And so as we go through, just some of the things that Meaghan talked about. So like water backup limit. This is an important one because a lot of times this isn't a default option. And this is something that your clients are going to want to make sure that they have in their policy. And so what you can do is you can click this little icon down here that will add it to what's called an agent letter. And so what Holistiplan does is it takes all of these insights and it will pop it into an agent letter specifically for your clients to show to their insurance agent to say, hey, these are the key things that we highlighted. Can you make sure that these are included in my policy? So water backup limit is one that we talked about. Mold and fungus is another one, especially if you're going to have water damage. That's going to be important. Rebuilding costs. The cost to rebuild your home is not necessarily the same as the market value of your home, especially in today where inflation and markets have just skyrocketed. The cost to rebuild your home is going to be way higher than most likely what you have in your policy. So you want to make sure that that's checked. And then some of the other things that Meaghan mentioned, like the flood outside of a floodplain, this is increasingly common. Having admitted versus non-admitted insurance, like what Meaghan was talking about earlier, and then water shutoff devices. So all of these things are things that you can flag. You can put to the insurance agent letter, and I'll show you what that looks like. So again, this would be white labeled with your logo. It would have your client's name at the top. And it basically says, hey, we found a gap. We want to make sure that you talk to your clients about this, and this is covered. And this is just a really nice take home for your clients to go do their homework. You know, as the advisor, you are the center of their financial universe, and you want to make sure that they're well covered.
And I feel this also allows you not to become the insurance expert, but just, kindly pass your clients to that person they know and trust to help answer these questions in depth that you've uncovered. So again, making sure you don't have to learn everything, but just know when to guide them to their trusted source.
Exactly. Yes, you want to be the facilitator. Okay, so Pablo, where does the insurance get uploaded in the software? So for this, you need to have Premium Plus. That's the subscription level that supports insurance. And once you have that, you just need to turn it on if you are an admin. That would be in your settings. And you can go into your households. You would select one of your clients, and it would show up right here on the households tab. So insurance risk management. And then from there, you would do create insurance review, and that's where you would be prompted to upload the different documents. Cindy, yep, same answer. So if you don't have Premium Plus yet, we do offer a free 7-day trial. So even if you're already a subscriber, you could start with a free 7-day trial and just test it, see how you like it. So Premium Plus costs, it's just under 3,200, and that will get you 150 uploads. So well covered for your tax return uploads, well covered for your insurance documents. But again, yeah, highly recommend the 7-day trial. And that's it. That's all I had. Okay, you have Premium Plus, don't see settings for turning on insurance. Okay, so Pablo, I would recommend reaching out to support. If you go into the Holistiplan app, there should be a little link where you can contact support and we can get you helped out there. Okay.
Thank you all. I appreciate you joining and being so interactive with great questions. It's always fun.
Yeah, thanks everybody. We'll see you next time. Have a great day.